Welcome to Trading Lounge and the S&P 500 for the 25th of March. And starting on the weekly chart here, we've been working through this pattern here as an expanded flat pattern, as an A wave here, an A and a B and a C wave here for the B wave. And an expanded flat takes the top of wave 3 out and also pulls back down and takes the wave A out here as well. It does appear that we have 5 waves down here completed now for wave C. So the general thing is we should be moving up here into wave 5 now. It's a bit difficult to take that on, especially with the current virus situation. But we'll just work with what we've got. There's a couple of things I need to point out here as well as we dive into this particular structure here. One of the things here is that the stochastics here has dropped back down into previous lows, so that's a good sign. The stochastics was created by George Lane, who's passed away now, 15-20 years. Time goes pretty quick. But he was an S&P trader as well. He was a day trader, and him and his grandfather created this indicator. And I won't go into the formula, but it was they were metal people, so it was a formula that they took from that about how much metal to put in to another metal or something. So, but anyway, it works quite well. So the monthly stochastics is still oversold, of course, overbought, but the weekly is here where it is, which is a good indication because we're working with that current low here, and that's a good way to use the indicator with current lows here, because and current highs as well, because if I was using the stochastics here and say I had a high here, or even if I had a high here, I know that when the market comes up to this previous high here, and if the market's going to continue up here, then the indicator is going to flatline here, and then you need to take it up to the next degree, and that's the same here as well. It is good, whatever indicators you do use, it is really good to pull apart the calculations and understand it fully, because once you do that, then you understand that you don't actually need the indicator. You can actually see it in the price action itself, and all the indicators, the whole 3,000 of them or whatever there is of them, are made up of the price and the volume. So let's go in and have a look at this fifth wave here. I've got a few things to say about that. So on the daily chart here, we'd been counting it down as 1 and 2 here, and 3 and 4 and 5 here for this. And just to make that a little clearer, here we'll go to the 4-hour chart here. So this here, we've got wave 1 here and 2 here, then 1 and 2 here, and that wave 2 here is just a bit lower than this one here, so that's acceptable. And 3, 4 and 5 here for the third wave, the fourth wave here, and then I've counted this down as 1, 2, 3, 4 and 5 here is the best fit. And when I look at other markets, that's also the preferred count for that as well. I do have a little bit of a problem with this in that if I look at the Dow Jones for a moment, then this wave 2 here is higher than this one here. So if I move the Dow over here, then this little high here, where we're looking at this as wave 1 and 2 here, in this case here, it's higher than this one here. So what that does really for the Dow Jones from the top here, that would leave wave 1 here or wave A, because we could be moving into a triangle. We've either got an expanded flat or we've got a triangle in the S&P. So wave A here, wave B here, and then I've got from this high here, I've got a clear pathway down for wave 1 and 2 here, and then 3 and 4 here fitting, and then we've got those 5 waves finishing off here. So we've either got wave C here or got wave 3 here. If this is wave 3, for instance, well then wave 4 would pull back 38.2%, which brings us up to this point here. So we really need to understand this structure here. But coming back to the S&P here, that's why I've got wave 4 here, because wave 4 here, that would be the top of the 38.2% retracement level. I better just check that here. just roughly. So yeah, that brings me into the 38 there at 25.46 area here. So that's something that we need to watch here. And also too, as I mentioned, coming back into the daily chart here, or maybe even the weekly chart here, you know, this was the same thing that we went through here as well. You know, we could count the 3 waves down here, but if it was going to be a wave 4 up here, then we needed to move past the 38.2% retracement level before we got this one, you know, in case it was a move down through here. And we're able to use the level and the 38.2 to understand that the market would move higher from that point. Well, we have to do the same here as well again. So I have been harping on about using the 2,500 here as a catalyst for support. And a trigger to the upside, and we'll look at that trigger as well. And yes, this whole pattern here can be in an expanded, I mean, we've got it as an expanded flat here. It could turn into a triangle if we haven't counted these 5 waves down here correctly as such. So it's just a little sort of roller coaster that we actually have to get through, that I've noticed, you know, because this 5 waves here all depends on this here being a bit lower than this one here, and on the Dow it's not like that. So it's possible that we can have wave 3 here and wave 4 here, and then still have another move down from that point. So I need to be mindful of that. There's a couple of hurdles that we need to get through, and one of them is the wave 4 here, and the other one is that if there's a bigger bear picture happening, we need to look at this as a situation as an A and a B and a C wave here coming back up to this 50-60% retracement level here. And we've talked about this here on the daily chart a few sessions ago, where we would look at this here as the 5 waves down through here, or it was actually on the weekly, wasn't it? Yeah. So it was on the weekly chart here when I also wanted to talk about that as well, because we need to work out if we're going to get an ABC pattern up here and then fold down from that point. We need to be mindful of that, you know. The funding that's coming into this space here to push this back up. Once that money's in there, you know, what's going to push it up further? You know, this happened in 1929 as well in the crash, as I explained before. So a certain amount of money goes in to push it up, but then there's no more money to put into it. You know, it's not enough to trigger retail suckers into it, and then it goes over. So we need to really understand this here as well, you know, this corrective move. So we've got a couple of things here. We've got this as a possible a move up here as a little wave 4, and then dropping down for another structure. So, you know, I need to clean that up somehow. So we need to get through that. And the next one is this just going up here as an ABC and then folding over, coming down through here as well. So we'll need to look at stocks and other indices to try and get some lead on this if we can. But that doesn't stop us from trading long going up here. We know we just need to be aware of the dangers, that's all, you know, and where those dangers are. But doesn't stop us from trading, you know, in the direction of the market on the turn here. So yeah. So just coming back after saying all of that, we need to look at this particular structure here for this now. So I'll just go to the 1 hour chart here. So yeah, look, one of the first things, this 2,500 here is a medium level. So we really want support on that. That's where the 38.2% retracement level is. So that's there. What we're looking for on here is a classic trading levels pattern. So that can come in 2 ways, well, 3 ways, but 2 ways mostly. So if we just consider this the 2,500 level across here, this is the most common pattern when a market is moving up and migrating across the psychology of a price point here of a large number. So it comes up to the large number, it reacts from that, as profit taking in that, value buyers come in, push it up to a certain thing, but nobody else comes into it at that point, and then it folds back and double checks again and then starts to move up. So in terms of trading, you would trade to the 2,500, get out, don't worry about all the swings, and then move back in over here when it's ready. So there's that one here where it drops back below the level here, which is the most common. Then the variation on that pattern is this one here where it doesn't drop back below the level here and it just like walking up steps. So we always go long on this high. That's our reference point, and then we try to come down to here. If it drops below here and comes back up, then we try to get it here. If the pattern is looking good at this point when it drops back here, and what I mean by that is this move all the way up here, is that wave 3, and is that wave 4, and is that wave 5? And if we get an A and a B and a C back to the 50-60% retracement level, well, then we can also buy lower as well. It doesn't matter what you're doing, long as you know what you're doing. So what we want to be looking at here in a bit of a nutshell is we want to look at, well, we'll move up and we'll see the reaction here, and then the first high above the level, and then we'll see some sort of ABC pattern here, and this is where we can start to move in. I mean, this is the safest place, just in here, getting back on support here, but this reference point, taking that top out here, that second high here, is so important, because what it does, it actually confirms that this is a 3-wave structure, because otherwise it could just, you know, go to here. It could be down for 1, back for 2, down for 1, back for 2, and keep working lower at that point. So that point there, that B wave, is critical in actually confirmation as evidence that this is actually a corrective pattern. But also having 5 waves here as well, coming up here, helps as well, because we know that if we get 5 here, well, then we'll get 5 over here as well. So it makes it a bit easier to buy back in at the 50-60% retracement level, or at least to build the trades in, because if this is a 3rd wave going up here, or C wave going up here, we really need to be in, you know, we need to have our positions in this section here, but step by step, building 3 positions in or 4 positions in is critical at that point. The other little the levels here, trading levels. So we've got 2,500, which is halfway between 2 major levels, 2,000 and 3,000, obviously. From 500, the next level up is 800. So that's what we call the profit-taking number. Wherever you see number 8, you'll always see the bids be hit. And the other important point here is that we've got group 2 here, so halfway between 800 and 500 is 2650, which is the lower end of group 2 here, which would be minor group 2. So group 2 will be 65 here, 72, which is 720 in this case, and then the 80 here, the number 8, so 65, 72 and 80. So this will also be a very important place here. This is a long-term trend line coming through here as well, so that will play its little part in here. So just pointing out those things that you need navigation through them. But our first step is to see if we get 5 waves up here, and then if we get the corrective pattern through here. So this is just my doings here, so that's not really to do with anything important. I haven't put that out there, but that was just sitting on top of group 1 here. So from 2,000, we've got 100, 200 and 300. So for me, I'd look for a little classic trading levels pattern in here and go long. So we're really looking, if you went long here, then you'd need to leave the stop below the always below the 62% retracement level, 61.8%. You'd have to leave it below always 62%, because that's where it could pull back from wherever you got into. So we'll be looking to go long over here, and we'll also be looking at this as a 5-wave structure here, and we'll look for that once we got that high in place, which will probably come in across these guys here somewhere, and we'll look for that pullback area to move into that space there as well. I'll just go to the tick chart here just to have a little look at this structure here. So yes, and also too, I had the wave 5 on this low here on the previous chart. I don't think that's the case. And the reason for that is because, yes, wave 4 is rather high here, and it could be tucked in the stuff that I can't see here, but I don't think that's the case. So, and also too, we've got 1 and 2 and 3 and 4 and 5 here. So we've got a nice 5-wave structure here for this. So we'll need to look at this as wave 1 and 2 here. And then without opening it up too much, you can see 1 and 2 and 5 waves in this little structure here for 3, 4 and 5 here, then 1, 2, 3, 4 and 5 for 1 and 2 here, and wave 3, 4 and 5 for the third, the fourth wave here pulling back to the fourth wave 1 lesser degree. So we're looking at the fifth wave moving up here. So at a glance that would be 1, 2, 3, 4, 5 here. That'll be wave 1 and 2 here, then 1 and 2 and 3 and 4 and 5 to the third wave, fourth wave 1 and 2 and 3 and 4 and 5. So I think we're quite close to that that top here for this, but we've got the psychological game of this 2,500. The market would like to push up to that point there, so I'll just leave that. It looks like it can be here, but it probably wants to get a little bit higher here. This wave 4 here will pull back to, this will be the reaction, you know, the arrival, the reaction is wave 4 here, and then up for wave 5 here, and then we'll look at the A, the B, and the C here. So we've got another session for this to resolve across this level here. So you kind of know what to do now at that particular point. Thanks for tuning in and appreciate the support. Cheers.